Hey, hope you are well. I wanted to talk today about cash flow forecasting. It's a really important topic for business owners. Really important that you as a business owner, you as a entrepreneur, solopreneur, you as a business leader, implement cash flow forecasting. I've put together a presentation. Let's pop it up and we can go through this. Okay, so cash flow forecasting, really critical element within the business. This is just me. We don't need to see that. Okay, so what is cash flow forecasting? Cash flow forecasting is the process of estimating the inflows and outflows of cash within a business over a specific period. So we can look at and define a specific period being a month, a week, a year, 2 years. And what we're doing is we want to estimate the cash that's flowing into the business and the cash that's going to leave the business. So, how does money come into the business? Money comes into the business through the revenues we generate, through the sales we make, through investments that we may acquire, through loans or things such as lines of credit, overdrafts. Well, not so much an overdraft, but lines of credit is something where money's going to flow, into the business. Outflows are going to be our expenses, so it's going to be us paying salaries. It's going to be me and all our operational needs, our rent, are licenses, marketing, advertising, paying for utilities, paying for actual goods. If it is that we're, buying goods to then resell, perhaps maybe we've got a clothing business or we've got a food business. We're going to need to go away and buy products in order to sell those. So, monies will be leaving the business. So, why cash flow forecasting matters? It really matters because we want to avoid cash shortages. We want to help prevent the business from running out of cash. It's said that 82% of small businesses fail due to poor cash flow management. So why not be one of the 18% who survive? Really, we should all be wanting to diminish that stat. So when this next report comes, it said, 50% or 40% of businesses fail due to poor cash flow management. Another benefit from managing our cash flow is that we can identify investments and we can perhaps scale. So if it is that we're managing our cash flow and we can see cash is coming into the business and we have a a healthy position from a cash viewpoint, then perhaps maybe then it's time to open that second location. And then we can understand the outflows associated with that second location. It helps us to improve decision making. One of the things that I work quite a lot on with my clients is to really utilize the financials to reinforce the decisions that we're making. So those decisions are based on not on assumptions, but they're based on analysis, they're based on data, they're based on solid information. When we go away and we make those financial decisions, we make those strategic decisions. So, some common challenges without cash flow forecasting. We have an inability to pay our bills or our employees on time. One thing that is going to definitely upset our employees is if we aren't able to pay them. That's definitely going to be it's a recipe for disaster. We're not able to pay our employees are going to be upset. We're going to miss growth opportunities due to lack of planning. So where I just mentioned, where we're able to perhaps maybe identify that second location, that third location. Perhaps maybe it is that we can bring on board, a couple additional members of staff. If we don't forecast then we won't really understand the cash that's flowing into our business and where our cash position is, um, to enable us to take advantage and perhaps maybe bring on board that additional employee. We're going to have an over reliance. So we're going to increase our reliance on loans and overdrafts, lines of credit. We want to avoid those types of things. Okay. And another thing, we're going to just, as you know, business owners, we're going to have more stress. We're going to try and minimize the stress as much as possible. So, how to build a cash flow forecast? First, we're going to determine the time scale that we're going to forecast over. Is it going to be weekly? Is it going to be monthly? Is it going to be quarterly? We're then going to identify the cash that's coming into the business. We're going to identify, is it via sales? Is it via investment? Is it via a loan? Are we going to take that loan to go away and buy that piece of equipment? Then we can identify when the cash is going to come into the business. We're able to track cash outflows. Or sorry, the third thing we want to do is to track our cash outflows. So first, determine the time frame, monthly, weekly, quarterly. Second, cash inflows. When did they occur? Third thing, cash outflows. When are they occurring? When do we have to pay our rent? When do we have to pay our salaries? When are we purchasing that inventory? When are we paying for utilities, professional fees, etc.? We're going to estimate for variances. So we want to put in perhaps a contingency because we can plan, but then life happens. There's always going to be an event which was, it's come out of the blue, it's unexpected. So really, we want to have a cash buffer. What I do with my clients is we will look at our overall expenses, and then perhaps we'll include a 10% buffer, all of our overall costs as a buffer, just in case things happen. And then we want to regularly update our forecasts. So we produce a cash flow forecast. Perhaps we'll go for a month, 2 months, and then we'll look back and we'll see, okay, what actually occurred during that particular time. So then we can adjust and flex. So tools and techniques, you can use a spreadsheet, a Google Sheet. There's loads of software solutions out there, kind of QuickBooks or Zero or FreshBooks. I'm not going to preach on the benefits of any one software over another, but there are software tools out there that have reporting features and some tools that you can utilize. I personally am a fan of Excel. So some best practices: be conservative with your revenue projections. So if it is that you kind of guesstimate that perhaps maybe you're going to generate $1,000, $2,000, $10,000 a month, perhaps maybe only forecast for 75% of that to actually occur. Be a little bit conservative. Don't think that, you're absolutely going to blow your sales performance out of the window. Perhaps maybe dial it back a little bit and only include, as mentioned, 75% of that forecast. Just be conservative, and then what you can do, you can look back and then really see how that performance went, and really if it's going to really justify what it is that you're up to. I'd mentioned regular reviewing and adjusting your forecast. Talked about including buffers for emergency, and then perhaps maybe engage with your stakeholders. Work with your bank, work with other entities around you who have insight into what it is that you're up to. Forecasting within the business, it really supports, again, I'd mentioned about supporting your expansion needs. It helps you to build trust with those around you, and it really helps you to seize opportunities. Start today. I challenge you. build a best forecast today. You know, the best time to start was yesterday. The second best time to start is now. Start now. You know, build a forecast. Why not start up with a forecast this week? So, next up, you want to begin tracking your cash inflows and outflows immediately. Choose a forecasting tool that will help your business and regularly review your, the forecast that you put out there. So I challenge you, start today, take action, take an action. If you need to, feel free, reach out to me, drop some comments in the chat. Yeah, and let's take action. Let's get busy. All right.